Hello and welcome. You're watching Prime Pulse News USA. Headline: Trump pushes for end to quarterly earnings reports, proposes 6-month disclosure rule. Tonight's top story: President Donald Trump is calling for a major change in how American companies report their earnings. He wants to put an end to quarterly disclosures and instead move toward a 6-month reporting cycle. Supporters say it would reduce costs and encourage long-term planning. Critics warn it could hurt transparency and shake investor confidence. Let's break it down. Report, date and place. On September 15, from Washington, D.C., President Trump posted on Truth Social and reiterated in brief remarks to reporters that quarterly earnings reports, known as 10Q filings, should no longer be mandatory. Instead, he argued that companies should publish their results only twice a year. Trump's argument. In his post, Trump wrote that America's system pushes companies into short-term thinking. He pointed to China, where, according to him, firms look ahead 50 to 100 years, while in the United States, corporate managers are judged every 3 months. Trump called this practice, quote, a bad system that discourages long-term growth. He argued that less frequent reporting would save companies money, reduce administrative pressure, and allow managers to focus on business strategies rather than Wall Street expectations. Background. Currently, U.S. public companies are required to file quarterly reports with the Securities and Exchange Commission, a rule that has been in place since the 1970s. Alongside those reports, companies must also issue annual filings, known as the 10K. By contrast, in Europe and the United Kingdom, many firms already follow a semi-annual or long-term reporting structure, which Trump is now advocating for in the United States. Supporters' arguments. The benefits. Supporters of the change argue that it would encourage executives to think beyond the next quarter. They say it would cut costs for compliance, reporting, and auditing. And perhaps most importantly, it would reduce the short-term pressure placed on CEOs and CFOs by shareholders who demand immediate results. Critics' concerns. The risks. But critics warn there's another side to the story. If financial disclosures are released less often, transparency could be weakened, making it harder for investors to know the true financial health of a company. Analysts also fear that delayed bad news could cause sharper market shocks when results are finally revealed. And with less frequent updates, investors may struggle to make timely and well-informed decisions. Regulatory and legal outlook. For Trump's proposal to become reality, it would require approval from the Securities and Exchange Commission, the SEC. This isn't the first time he's floated the idea. During his first term, he asked regulators to study the impact of quarterly reporting. At that time, the discussion faded and no change was made. Now, as president again, Trump is reviving the push. Market reaction and future implications. Market analysts are split. Some say the plan could help corporate America align with global standards and promote long-term thinking. Others caution that the U.S. markets, known worldwide for their transparency, could lose investor trust if reporting becomes less frequent. What happens next will depend on the SEC, and whether lawmakers and regulators are willing to shake up a system that has been the backbone of American financial reporting for nearly half a century. Closing. In the end, Trump's proposal highlights a fundamental debate. Should companies focus on quarterly performance and immediate shareholder demands, or shift toward longer-term stability and vision? The answer could reshape not just Wall Street, but the very foundation of investor confidence in the United States. You're watching Prime Pulse News USA. Stay with us and don't forget to subscribe, because your source for what's trending, what's changing, and what's next in America.